Good morning. This is Larry Edelson for my Uncommon Wisdom video for Thursday, September 16th. I hope you're all having a good week. First, on a note, I'd like to urge you to stay on this video at the end of my commentary. I have a special guest that I'd like you all to hear from, a colleague of mine who is an expert in covering some very interesting aspects of today's markets and today's financial world. With that, again, please stay tuned throughout this entire video for a message from my colleague. Now, let's go right to the markets. Very exciting this week. We have seen gold move to an all-time new record high at about $1,274. I have the gold chart in front of me. This is the chart that I've been showing you for the last several weeks. You'll recall I showed you this first red line here at the 1225 level. When we broke above that and pulled back slightly to test support, I said we'd be likely heading to the next red line, which was the previous record high at around 1270, 1271. Well, we just punched through that on Monday and Tuesday to a new record high at $1,274. Gold is likely now to pull back a little bit and consolidate, but this is confirmation that the seasonally strong period, autumn-fall period for gold is well in motion now. And of course, we have the wind in our sails from the long-term, intermediate-term, and now the short-term bull markets in gold, all lining up for higher prices. Like gold, gold mining shares have done extremely well this week, jumping as much as 4, 5, 6% on many gold shares. So that's terrific news for our core portfolios and the Rio Wealth Report and other recommendations I've made in gold. Now, why is gold rallying so much? Again, it's anticipation that the U.S. economy is slowing, but more importantly than that, the very high likelihood that the Federal Reserve will continue to monetize debt and print money. There's no question that's going to happen. The only question is how much and when, and how will they spread it out over time. Other concerns right now is, of course, Europe's sovereign debt crisis seems to be making a comeback. No real surprise there, but again, that is also bullish for gold. And we've seen some very, very positive economic news out of China. It seems like China and Asia are the only parts of the world that are really growing right now. And some areas, of course, in the emerging markets of Latin America. Let's now take a look at the next market, perhaps the most important to many of you, the Dow Industrials. You'll recall last week that I said the Dow would likely continue to test the 10,500 area, and certainly we have gotten as high as almost 10.6. Excuse me. However, we're getting a little toppy here, so I do expect the Dow to trade back down, and I am still convinced we're going to see Dow 9,000, Dow 8,700 going into the autumn period. We'll have to keep a close look at the Dow because it's betwixt and between right now. The economy is sinking, so naturally that's going to act as a magnet pulling stocks down. But on the other hand, stocks can in general also reinflate higher on Fed money printing. And I think we're seeing that in this rally. That's why the Dow, for instance, got above 10,526 resistance. Longer term, there are some bullish implications of Fed monetization for the stock market. But short and intermediate term, we have the gravity of the sinking economy wanting to pull stocks back down. I believe the sinking economy will prevail, and we'll get that move down in the Dow to 9,000 or so. But we do have to keep the long term in focus because, again, Fed money printing can inflate a lot of assets, not just tangible assets, but also paper assets. Let's take a look now at the dollar index. Last week I told you I was concerned that if the dollar index broke, down below this trend line here, that it would show some weakness. And indeed, so far the dollar index has not made a new low for this move, but on the other hand, it has been unable to get back above this line here, this trend channel line here, which previously acted as support and is now acting as resistance. So it's quite possible that we could see another major leg to the downside in the dollar very, very soon. On the other hand, we could also see some sideways action in the dollar before it plunges again. However, I do believe that the dollar's rally of late last year and into, May of this year is finished, and that the long-term bear market in the dollar is back, again, largely because the Federal Reserve will stop at nothing to try and save the system and save the economy by whatever means necessary. With that in mind, I'll see you again next week. Stay tuned to my columns and stay tuned to my next guest, my colleague Rudy Martin, who will bring you some interesting thoughts on the markets that he looks at. Best wishes. This is Larry.
Hi, I'm Rudy Martin, the managing partner of Latin Capital Management and publisher of the Latin Stock Investing newsletter. I've been in the investment business for nearly 30 years, beginning at Transamerica, managing a $2 billion private equity portfolio. From there, I went to Wall Street as an equity analyst for Dean Witter. In the late 90s, I became a senior investment analyst at Fidelity Investments. And 5 years ago, I joined Martin Weiss here at Weiss Ratings as the director of research. For the past several years, I focused my attention on emerging markets. I believe there are incredible opportunities for growth in emerging market stocks. And for the next several weeks, I'll be highlighting many of those stocks. For instance, did you know that the richest man in the world now is not Bill Gates or even Warren Buffett, and that instead he hails from Mexico? Yes, his name is Carlos Slim, and he's worth an estimated $61 billion and controls telecommunications giants Telmex, Telcel, and America Mobile. And just a few years ago, those Latin American stocks were just a fraction of the size they are today. Early investors in those companies saw their investments turn into small fortunes. Each week, I'll examine the stories and trends shaping the markets in some of the fastest growing regions of the world. Early opportunities to get in on the ground floor of the new movers and shakers in Latin America and emerging markets, just like the Carlos Slim and Telmex in Mexico. And I'll make recommendations on stocks and ETFs that will offer huge opportunities for growth. I use a proprietary screening model developed over 30 years of investment experience to identify potential companies that meet a specific set of criteria. I also conduct further research to find companies that have strong fundamentals, sound business models, and significant competitive advantages. We'll start officially next week, so stay tuned. Until then, best wishes and happy trading.